Hey, what's going on, guys? Hope everything is going well. Alright, the last video I did was with Panama Orange, but before getting into all the topics occurring in the world economy, I wanted to go over what I feel is happening for the year 2016. I didn't do a video outlining my thoughts, just the time wasn't there. So if you look at 1 month into it, even if I didn't see the Chinese situation developing, I would have predicted more volatility. Volatility is on the rise. I did a video last year, end of 2014, stating volatility is coming back. You didn't see volatility coming back last year until September, August or September of last year. And the first of this year, you definitely saw volatility because of the Chinese situation. It's getting worse. And the Chinese situation, I actually did a video a few years ago, and I outlined that China is slowing down. And how I determined that was, if you look at, number one, the credit situation in 2014, 2013, they started to slow down big time. And when you have stress in the credit markets, that usually means that there is stress all over the economy. But most people don't figure that out until a year or two later, or unfortunately when the crash does happen, and then everyone becomes bearish then. But that being said, we have seen all this weakness in China. However, in the short term, within the next month or two, I wouldn't be surprised to see a dead cat bounce unless you see a Chinese devaluation occurring during that time. I don't see that happening within the next 1 to 2 months. Could be wrong. I know Kyle Bass says that he sees a devaluation in the coming months. I mean, I am actually going to put on a trade through my broker. I'm just trying to set that up with him right now. But that's just me being upfront with you. I don't see it happening in the next few months. I do see a devaluation occurring later this year, and that is because China is just experiencing slowdown, and in order to try to get away with it is devaluing or printing more monopoly money via quantitative easing. I don't think they're going to do QE, but what they may do is they may devalue their currency, which still, in effect, does create inflation. So either way, you're going to create inflation. I think they're going to go with the route of devaluation because you create less inflation that way than quantitative easing. Some people may debate on that topic, but we could talk about that later on. Two, we want to look at the overall markets in general. If you look at oil, you should see that it's trading $30 a barrel right now, or something around there, $31 a barrel. That is ridiculous. For the long term, I have put on a long-term position in the futures markets, long oil. I know that it's not going to materialize anytime soon. That's why I'm hedging, shorting in another contract month, just hedging that position. Because I know long-term situation, it's going to pick back up. Now, the lows, could it be in the 20s? Yeah. Could it go all the way to $10? That would be crazy, but yes. I wouldn't be surprised to see $10 a barrel for oil. And the reason is that, like I said before, China's economy hasn't fallen apart yet, completely. When China's economy falls apart, what is everyone going to be doing who's long oil? They're going to be deleveraging their position. And because of that, we could see oil go to ridiculously low levels, just like you saw in 2007, 2008, where oil just spiked all the way to $144 a barrel. And that led to the Great Recession that we're still experiencing right now. So it spiked all the way to $144 a barrel, and now you see all these derivatives traders, all these futures traders and whatnot pushing the price of oil down, because that's what the charts are saying. A lot of bearishness. And hence, because oil is going down, you see markets like Russia taking a pounding. You see Venezuela taking a pounding. And you're going to see more countries in the Middle East calling for higher oil prices. And that means that the Saudis will eventually cave in and cut production. But ultimately, the free market will take hold. If you look at the rig count that came in yesterday, it was lower than what has been in the past. And you're going to see continuously lower rig counts, and supply and demand will come back into play. And that, in my opinion, in the next 5-6 years, you're going to see higher oil prices, in my opinion. Could I be wrong? Yes. Even though we see a strengthening dollar right now, I still see higher oil prices down the road. And that's why it's a long-term play. It's not a short-term play. Short-term play, after a dead cat bounce, I still feel it's going to go lower. Now, thirdly, I want to go into Japan. Japan right now is an outright mess. The other day, they announced negative interest rates. And if you look at their bond market, it is ridiculous. I mean, I look at CNBC and I look at the bonds that are trading right now, and I see the 10-year yield is trading at, I can't believe this, 4 basis points. 4 basis points. How on earth is an industrialized 10-year bond trading at 4 basis points? And eventually, maybe not this year, but maybe in the next few years, that bond market, it's just going to erupt, in my opinion. And not going to go to like 10% or 7% or 6%. Maybe it may go a few basis points, not a few basis, a few hundred basis points higher. And they may have to devalue their yen because of that. And I am playing that trade via my broker. But it's a long-term strategy where eventually Japan, they're going to lose control of the bond market. I feel that the Europeans are going to lose control of their bond market. But the question is, when is that going to happen? Is that going to happen this year? Maybe. Next few years? I still think it would happen next few years. I feel that because of China's situation right now, what they're going through, it may just delay all of this madness from occurring. We're still going to see pain. But two things that I definitely see happening is, number one, China. Something is going to rumble this year, in my opinion. You always tend to see something happen during a presidential election. China, and then Europe. If you look at what's going on in Europe right now, you can see even though the euro has traded higher, I mean, it went to 1.12 the other day, I still feel that it's going to go at least to parity this year. Could I be wrong? Yeah, sure. Because of all of the choppiness going on in the market, people may just say, hey, you know what? We want to play the reflation trade because, you know what, the strong dollar trade is overbought in the short term because the Federal Reserve is not going to raise the Fed funds rate 4 times. Okay, I get it. You may not see the euro going to parity or going to 80, where I ultimately see it happening. The next few years, could be 5 years, whenever that happens. European situation is still a mess. You look at the refugee situation, a mess. The economy is a mess. People in their teens can't get jobs. What's the unemployment? 40% for people out of college. It's ridiculous. And not to mention their banks. Their banks, in my opinion, are insolvent. They're just getting all this welfare money aid from the Federal Reserve and the central banks. Ultimately, their chickens will come home to roost. Ultimately, it's just the timing. And then I wanted to go to gold, right? Gold has done well the last week or so. I was kind of surprised that after the Bank of Japan said that, hey, we're going to have negative rates, I thought the yen would weaken. And whenever you see the yen weaken, you tend to see gold prices go down, right? But ultimately, I still see gold, it's going to go below 1,000. Once it goes below 1,000 for a long-term hold, I think that would be, in my opinion, for me to start accumulating again for long-term purposes. Short-term, anything could happen, right? You could see that reflation trade occurring again. But still, when push comes to shove, when you see China experiencing problems, Europe experiencing problems, mainstream economists call this deflation. When they think it's deflation, you usually see money going into the dollar, money going into even the U.S. bond market. And hence, you tend to see commodities getting smashed. You've already seen oil getting smashed. You've seen copper smashed, silver smashed. anything that trades in dollar-linked contracts, they've been getting smashed, commodities-based wise. Natural gas is getting smashed. Everything is getting smashed. But I think after this whole smashing occurs, maybe a year from now, when you start to see everyone comes out saying everyone's bearish, you're going to see Harry Dent come out saying, hey, Dow 6,000 and whatnot. I think that's the best time, in my opinion, to load up on all these commodities that are going to get smashed, and some of these markets that are linked to oil and other commodities like Russia. I think Russia, maybe from a year from now, I think that's going to be a great buy, but I think that it's going to ultimately go lower in the next year. China ultimately lower, but I think they're going to be fantastic, in my opinion, right? So don't take my word for it. I think that these are going to be great buys for the long term. Just buy and hold. You wake up 6-7 years after you buy it, I think it's going to go higher. But that's in 2017. I thought Russia was a good buy in like late 2014. I traded around and I said, like, screw it, I'm done with that. And I think I got away with maybe a little gain or a little loss. Don't remember on the top of my head. But ultimately, market situation, what I see right now, dead cat bounce in the market's occurring. But when I see that dead cat bounce, what I'm going to be doing is I'm going to be shorting China. I'm going to add to my Russia short. I am going to add to volatility, long volatility. And I'm going to get rid of all my like XIVs, which are shorting the VIXs and whatnot. I'm still going to be long just as a hedge. But that's how I see it in the short run. What do you guys see happening in the markets? Let me know. Talk to you later. Bye.